Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. Hope you're having a phenomenal day. Let's take another look here at Solana, see what's going on. This is going to be a quick analysis on kind of like an update from earlier today, because I did obviously look at this here already, and we were expecting it to pull back. It's continued to do so. It's not really looking super strong. It's almost inversely paired to Bitcoin, because if you look at Bitcoin here, maintaining a range, more likely than not going to pull back. I think Solana may also as well. Okay, so again, just keep that in mind. We're at this local point of control too, though, so there's some positive. But again, you generally don't want to try to trade just that one thing, right? We want to kind of take a well-rounded approach and see what's going on. So let's quickly look at liquidation and kind of go from there. Do me a favor, hit the like button, comment below if you get a chance. Love to hear it. Absolutely appreciate that. And thanks again to my community for some awesome feedback. Good 44% from AVAX in 2 days. Solana, a little 10% there in 5 days, and Bitcoin 54%. I laugh because that coin kind of threw us for a loop there. Ran towards 160 and then of course pulled back. So we got in with not phenomenal profits, but we got out unscathed. Reason why, folks? We use low leverage. Okay, simple as that. We would have got liquidated if we used anything higher. It's just kind of the way that it goes. Low liquidation is, low leverage equals less propensity for liquidation. It's really the right way to go. So try not to listen to those other idiots online that are telling you to, use your whole account and to essentially use, 20, 30, 40, 50x leverage. I've used 20x leverage before, don't get me wrong, but it can get you in trouble if you're not careful. And I think being a responsible trader is probably the more appropriate thing to do. I know it's weird, very cliche in crypto to be responsible, but hey, this is my business, this is my livelihood. I prefer to keep it that way. Okay, so let's quickly look here. We talked about this earlier, that the 138 to 140 range is a heavy concentration liquidation on the macro. We're starting to see that more so in the smaller time frames. These people just don't learn. Look at this. Keep getting destroyed on the way down. I think these 140s are probably next, honestly. It just seems like we're going to see some further downside. Now, we could very well see a recovery, but there's not a lot here kind of telling us that. Back quickly, just to kind of note here, between 133 now and 138, we have maybe 5 to 10 billion in liquidation, depending on how much, if you round up or down there. There's a lot. That's basically the easy way to understand it. Okay, so that does imply that further downside is possible. Now, is it probable because of that one thing? Absolutely not. You've been watching my channel long enough, you'll probably know that you want to take a diverse approach at trading. You don't just use Elliott wave and call it good, right? You want to use that in conjunction with other things too, because it's just so stinking vague that there's no way to really navigate it correctly, at least unless you're like a professional trader. I use Fibonacci retracement in everything that I do, so it definitely carries weight, but it's not something that you want to solely rely on. There's a lot of other things that really help us. So let's see if there's anything telling us there's a shift in momentum coming, okay? And again, this isn't going to be a consolation for you folks. I'm not going to tell you what you want to hear. So the truth is this time frame, daily, 4-hour, hourly, all the time frames I prefer to use are pretty much garbage right now. There's no other way around it. There's one slight consolation. This is just an overemphasis with this fair value gap here upwards of 150 to 155 or 156. I'm rounding up. That's concurrent in a lot of ways with the CME gap for Bitcoin. So you got to recognize that. Yeah, there's a reason for that, and that those generally get filled eventually. Okay, but we got a heavy concentration liquidation down here as well. So what's going to happen? Is the price going to come up here and come back down? Is it going to come down here, go up? That's really the question, right? We don't truly know. But if we do look at the indications here, we can see we're under 50 in the RSI, less likelihood of the price recovering quickly. We are breaking even with the money flow index, stochastics pulling back, MACD is losing its momentum, we're about to diverge. These are all signs telling us further downside makes more sense. Okay, 4-hour time frame as well. We are maintaining above 30, but still not great. Basically below 50 in turn, that is essentially bearish. Same thing with stochastic RSI, it keeps jumping up and down, not really sure what to do because every attempt to break out keeps getting stunted. So again, there's nothing here that we see that's very good, right? Okay, MACD's maybe slightly less divergy, right? So that's dumb. Why would you attach yourself to that and take a trade based on that one thing, right? And I say that, and I'm emphasizing that because a lot of folks come over to my community having gotten destroyed by an XYZ trader, and they're frustrated, and rightfully so. But it's mainly because they're taking too high a risk, and they're taking trades based off very minimal effort, I guess you could say. And again, if you want good results, you just maybe want to try a little harder. Okay? Not to say my way is the perfect, right? I mean, this month we're only averaging 80% for our conversion for our trades. So it's not like it's phenomenal. We've actually taken very few trades this month too. So again, it's not fantastic, not amazing, but it's just the truth, and that's how it goes. I'd much rather have less and consistent trades than more inconsistent trades. Anyways, we can see the fair value gap here reflected on the 4-hour too. So once again, upwards of 153, 155, we should see some kind of recovery there. This may even be a very large double bottom, right? What do you know? Perhaps. You never truly know until it starts. And the way we got to identify this trend reversal, by the way, is to establish higher lows and higher highs. Okay, so there's three steps you take, and I cover this in my scalping strategy that's available on my YouTube. I even go into detail on it with my trading university in our Discord. Please understand too, if you're part of our Discord and you're part of our premium group, please just watch the university videos. Do yourself a favor. It's extremely important that you understand some basics. But the truth here is that we're in a descending trend. Okay, there's ascending trends, there's horizontal patterns, and there's ascending trends. To break this descending trend line, we need to establish higher lows, which we still have yet to do. That's the starting point. Second to that, you need to establish range-bound activity. And just so you know, Bitcoin is establishing range-bound activity. Okay, so it's in like stage 2, where Solana's in stage 1. What we need to see from Bitcoin is to establish higher highs next. Okay, we haven't seen that yet. We're far from that here with Solana. So what makes you think that taking a long position is viable right now? Okay, it's not. So those are just kind of some pointers there. Anyways, the hourly time frame, we look at each Mocha cloud. We can confirm the lagging span is free and clear the price action. That's check number 1 to leave your short position open. So to my community, leave it open. We'll probably get some more meat off the bone. Conversion line below the baseline, lagging span's free and clear. The cloud itself is essentially both upper and lower lead, is not even close to the price action. These are all reasons to don't touch a long position with a 10-foot pole. Keep your short position open at least for the next 5 to 10 hours. That's basically what it's saying. Now, is that an exact science? Do you do only that every time? No, but this does tend to have a high success rate. That's why I prefer to use it, and I think it's beneficial in conjunction with the rest of everything we've seen here so far. All right, so what are your thoughts? Why don't you comment below, let us know. Love to hear it, and I hope you got some education from this, and I deeply appreciate you watching. Don't forget to hit the like button, comment below if you get a chance. We'll get more analysis out in the morning, kind of see where we're at. I am short on time today, so I apologize I don't have a lot of other coins I was able to cover, but I'll hit the ground running tomorrow morning. Hope you all have a good rest of your day. We'll see you in the next one. Take care.